Markets follow Brexit, US-China developments, shifting focus to FOMC. U.S. stocks closed the week higher on Friday despite some weak economic data. The Dow Jones Industrial Average gained 139 points, the Nasdaq pushed ahead 58 points, and the S&P climbed 13 points. At the start of a new trading week, equities were treading water, switching between gains and losses with Boeing, and Facebook shares dipped in limited gains. Boeing Corporation declined by 2.1% after Ethiopia said an initial analysis of black boxes showed clear similarities in the March 10th plane crash with October's Lion Air accident in Indonesia. Since last week, concerns over the safety of Boeing's Marquis Max fleet made the plane maker's market value decline by over 10%. Shares of Facebook fell 3.2%, marking a third straight decline totaling as much as 7.3% after Needham & Co. analyst Laura Martin downgraded the social media giant, citing concerns that negative network effects could speed up the destruction of value for investors. In other news, China's Congress on Friday endorsed an investment law that aims to address complaints, particularly from the U.S., that China's system is rigged against foreign companies. The U.S. claims China forces companies to share technology in order to do business in the country. Meanwhile, the reports that a proposed summit between President Donald Trump and China's Xi Jinping to end the trade war may be pushed back to June have somehow rattled investors but failed to bring back panic movements due to the remaining hopes for resolving the trade spat between the two of the world's largest economies. Investors are also gradually shifting their focus to the Federal Reserve's policy meeting later this week for further clues on the pace of interest hikes. The Fed is expected to lower their interest rate forecasts to show little or no further tightening in 2019. As a reminder, the central bank said in its prior meeting that it will be patient and data-dependent when deciding whether to raise rates going forward. The dollar was mixed both at the end of the week and on Monday, as moderate risk on tone, coupled with more bearish expectations ahead of the FOMC meeting, curbed the US dollar demand. The euro-US dollar extended gains to the levels just below the 100 DMA, around 1.1360, but failed to keep gains and retreated later on Monday. The pound fell on the latest Brexit developments, dragging the euro alongside. The UK Parliament Speaker John Bercow said that the government may not bring the same Brexit deal to another vote unless there is a change. According to him, the rules are necessary to ensure sensible use of Parliament's time. He also added that the government cannot legitimately put substantially the same deal back into the House. As a result, the GBP US dollar fell below 1.3200, which is the lowest since March 13th, but then recovered partially to settle above the psychologically important level. Meanwhile, the UK junior Brexit minister Kwarteng said that he expected the EU to make a decision on Article 50 this week. He said that as soon as possible following an agreement at the EU level, they will bring forward a necessary legislation to amend Exit Day. As for commodities, crude oil prices resumed on the upside move after a limited correction seen in the second half of last week. However, the general price action looks subdued in the market these days as traders refrain from major actions, awaiting further clues. Brent had settled above the $67 level after rejection from 4-month highs above the $68 level. OPEC and its allies agreed to cancel an April meeting, leaving supply caps in place through June. The producers also said that they would exceed commitments in the coming months, which also boosted futures. On Sunday, Saudi Arabia signaled that producers may need to extend the 1.2 million barrels per day of supply curbs past June into the second half of 2019. In the short term, traders will focus on fresh U.S. inventory data from API and EIA. Should the stockpiles decline again, the futures will receive an additional boost and could get back above the $68 figure. For a most robust rally, the barrel will need to see more dollar weakness on the potentially more dovish Fed meeting. Meanwhile, gold prices edged higher on Friday and tried to extend the recovery at the start of a new trading week, but turned flat after the initial rise above $1,306. The bullion mostly hovered around the $1,300 figure. Data on Friday showed speculators reduced their net long positions in gold for a third straight week. The yellow metal looks mixed just as the dollar that is preparing for the FOMC meeting. As there is no specific driver for gold at the moment, it is likely to remain relatively steady around the $1,300 mark so far. Further direction will be determined by the greenback's behavior, which in turn will depend on the outcome of the Federal Reserve meeting that concludes on Wednesday. So thank you so much for watching. That is all for today. Please click subscribe to always be in touch with the latest market news.